So you kind of got two systems, and I'm sure you are kind of already excited and kind of looking at how to kind of really put that to practice and put that to execution. So while you kind of keep thinking about that, let's jump on to the third strategy in trend following. And the third system, what we're going to discuss, is called as three musketeers. Let's jump on to understanding what these three musketeers are all about. Okay, good. For here, the system ingredients are technical chart, candlesticks, and you need three separate moving averages, which is 20 period, 50 period, and 200 period. 20 period, 50 period, and 200 period. Three of them. And then trading time frames are daily time frames here. Here also it's a daily time frame. Now execution rules. Let's look at the execution rules. So before we look at the execution rules, let's kind of quickly set up the chart and kind of come back here. So let me delete all the older ones and come back here. So we had earlier 13 and 34. I'm going to modify that. So 13 I'm going to change to 20, and then this one I'm going to make it 50, and I'm going to choose one more and give it 200 and leave it at blue maybe. Yeah. Okay, so we have all the three here. So if you can notice, we have blue, and then we have green and red. Here in this case, the green is 20, and so green is 50 and red is 20 moving average. You can kind of clearly see here, right? That's what we have kind of done that. So this is the setup for the chart. And you have to be in daily time frame. Here it's daily time frame, so we have to be in daily time frames. So let's kind of understand the execution rules for this system. What are the execution rules? Here are the execution rules. For entry, for long, price should be above, first criteria is it should be above 200 SMA, and price should touch 20 SMA or 50 SMA twice, and then go up. First of all, it should be above 200 SMA, and it should touch 20 SMA and 50 SMA twice, which means what? Touch means it is called as testing the support. This is a technical term. I don't want to go deeper. I'm going to explain that in the chart. It is called a testing the support. If the support gets tested twice at either 20 or 50 SMA, third time it touches and goes up, you have to go long. Above that, you have to buy. You see a bullish candle immediately after that and buy and kind of go on a long trade. That is long entry. Short is exactly opposite. Price should be overall below 20 moving average, which means 20 moving average. If it is below, it means it is in a bearish trend. Above 200, sorry, not 20, 200. Above 200 means it is in a bullish trend. Below 200 SMA means it is in a bearish trend. So if it is below 200, which means it is bearish. So price should test the resistance in this case. Resistance at 20 and 50 moving average twice. Third time it tests the resistance. Along with that, if you see a bearish strong candle, below that candle, short the market, hold the short position. So that is the entry for long and short. So now what is the exit rules? Exit long when the price once again touches 50 SMA. If it goes up and it comes and touches 50 SMA, that is your exit. And exit short when the price touches the 50 SMA from the bottom. If it comes below and it comes back up and touches 50 SMA, you exit. So 50 SMA is the exit point for the system. Now let us kind of see that in the chart and see how it kind of looks. So now for you to first go long, see here, the price has to be above this blue line. Blue line is, this price is comfortably above blue line. So all above blue line, we look for only long trades. Now, see here, price has gone up, come back, it touched once, twice. It has touched 20 and 50 moving average once and twice. So it has kind of taken a support here. After that, what it did, third time it once again touched here, and after having touched, it has gone up. So your entry is here. You simply enter here and keep riding and riding and riding. And when the price comes and touches 50 moving average here, this green line, this is where you exit. That's all over. And once again, if it happens, See, if it touches 2 times and third time goes back up, you find the third entry. So like that. So here we can check in the past, you know, again here, see here, it resisted once, resisted twice. Third time it came below this, we have to short, provided the price has to be below this blue line. Here all of this is happening above the blue line, so this is not a valid trade here. You know, if it had happened below this, we would have kind of done this. So in this system you don't get that entry, right? So here it has tended to go up, but it is below the blue line, so we don't take entry. So like that you have to search. Here looks like beautiful. See here, the price is below the blue line. Generally it is all below the blue line. Then what has happened? It has tested support once, twice, it came above, and third time it touched and it went below. Here you short, hold, you exit here, then again it touched once, twice, right? After that here you short, you hold it, you exit here, right? So here you got 2 trades, both are profitable trades. So here in this system the entry is late, but it will give you the signal only when the trend is completely assured, and the probability of the profits are very high in this system. Extremely simple, very easy to identify, and as you look at it, you kind of get that it works on almost many stocks like this. So we have around 160 odd stocks which we can do it on futures. You can do it, and this you can even do it on cash on the long side. Short side you cannot do. India typically is the bullish market. You will find enormous amount of long trades to kind of do this based on your capital. Simply go on long trades. You can do it on currency, you can do it on commodities, whatever you would like to kind of do that. It's as simple as that. So that is how the execution works on this. Hope you kind of got this, got the execution, entry and exit rules. Now let's kind of jump on and understand the risk management rules for this. Here initial stop loss is 4%, entry minus 4% is the initial stop loss. For stocks, 2% for indices, 2.5% for commodities. I would recommend do this mostly on stocks, don't do this on indices. Then once you are in the trade, 4% if it is in the money for stocks, 2.5% for commodities, move it to break even, pretty simple. And then later on trail at 50 simple moving average, because that is the exit level. Once the price goes above the break even, 50 SMA goes above the break even, you will start to trail at the 50 SMA, and eventually wherever 50 SMA touches, you exit that. Very simple system, but again very powerful trend following system. Hope you kind of got this crux. So if you got and understood the third system, which is the 3 musketeers, type in the comment, got 3M. Awesome. So I'll come and see you in the next video where we'll talk about the fourth system for trend following. See you in the next video.